Hello and welcome back to An Orange Future podcast, the quest for financial freedom, where I share my take on why I believe everyone should learn about and have some exposure to Bitcoin. In today's episode, I want to discuss what the heck is the Fear and Greed Index and why you should pay some attention to it if you are serious about building wealth. I must draw your attention to the next disclaimer slide. I'm not a financial advisor, and none of this should be taken as financial advice. But the warning sign is just to emphasize that if you do go down the Bitcoin rabbit hole, it may end up changing the way you see money going forward and how your government spends irresponsibly and keeps adding to a ever-growing debt pile. So the Fear and Greed Index, where does it come from? It is published that the original Fear and Greed Index was developed by CNN in 2012 to measure the emotions driving the stock market to gauge sentiment. Warren Buffett, arguably the world's greatest investor, coined the phrase, "Be fearful when others are greedy, and be greedy when others are fearful." There are many people that have taken a lot of notice of this, and there are some people that are too apprehensive when the markets turn red. So let's go into what the Fear and Greed Index and the measure of sentiment actually looks like. It's typically categorized into 5 sectors or levels. I wouldn't pay too much attention to the numbers, more the actual sectors themselves. The lower scores, the dark red, represent extreme fear. And the next sector is fear, where it's becoming a little bit lighter, almost like a blood orange red color. The next level is in the center when it becomes neutral. It can hover at this stage a little while in between transitions of phases. Then you go into a light green sector, which is greed. And then the last one is extreme greed. This really is when we're full on bull mode. So why pay attention to it? There are many Bitcoiners that have so much conviction that the Fear and Greed Index makes no difference to them whatsoever. And they all continue to stack and hodl regardless of what the market sentiment is at any given time. However, if you are serious about building wealth, then you might want to pay some attention to where the market is at. During a market downturn, the sentiment will shift to what's known as bearish. The needle of the index will turn to red, which, depending on the reason, will reach extreme fear or just stay in the fear mode. It really depends if it's a macro event, like COVID. Something extreme could put it straight into extreme fear, or tariffs, uncertainty, and things like that, before it heads back to the neutral zone on its way back to greed. And then if we go full bull market, the needle moves all the way to extreme greed. This is when everyone feels a bit happier and more bullish and find it easier to actually make some acquisitions. So extreme fear, why would anyone buy when it's in that mode? So among seasoned investors, both in the world of stocks and cryptocurrencies, periods of extreme fear can be the most profitable time frames to acquire assets. The problem here is nobody knows for sure how long the downturn will last and where the bottom will end up, where it will finish up. Extreme fear does not indicate a bottom. These periods can be very short-lived or drag on for what seems a very long time. Seasoned Bitcoiners will see this volatile period of uncertainty as a buying opportunity, like their favorite asset has gone on sale. They have so much conviction and long-term time horizons that they just continue to buy, or stack sats as they call it, at market tops or bottoms. How can you time the bottom? Nobody really knows when the market will bottom. Many influencers and experts may show graphs and charts with lines and moving averages indicators, but the long and short of it is the market will move when it's ready, and that's just how markets work. So what strategy should you adopt? There are 3 proven strategies when the index is in any of the modes. All 3 can work in any sector. There's the smash buy, and you hope you got somewhere near the bottom, or you've got so much conviction you don't mind. Then there's a proven strategy, which is known as DCA, which just stands for dollar cost averaging, which means you set up multiple purchases at regular intervals. These can be whatever suits your budget or time frame. For example, you could set up a regular daily purchase or every other day or even weekly. This can work out well if you anticipate the market downturn to drag on a little while, or you just want to just take a lot of the emotion out of it. You can just set these regular buys up to suit your budget. Next section, dry powder. Dry powder really just means keeping some money on the sidelines in cash, which is easier said than done. So your other option of trading strategy is a limit order. This is one of my favorite trading strategies and one I always try and keep some cash in reserve on the side, especially for market dips or what we call red days. With most trading platforms, there is no limit or time frame restriction on how many limit orders you can set up on an exchange. These are very satisfying when you try to time the bottom and don't want to go all in if the market continues to fall. The only restriction on these is actually how much dry powder or funds in the side you are sitting on. It just really depends on how much you've got there waiting. So you'd set up a trade, which is a limit order, and you set the price. If the market is heading downwards, you set up the limit order at whatever price you would be happy for it to fill at. You can set as many up as you wish, as long as you have the funds in reserve to complete the order. If you set the order up at, say, 50% of the market price at the time of the order, the probability of the order filling would be low unless there was a real market capitulation. Single and lower double-digit percentage drop orders are far more likely to fill if the market starts dropping. Remember, a limit order costs $0 to set up and you're free to cancel at any time. They'll just take their fee when the order fills. That's how they work. So most exchanges will tell you how far in percentage terms your limit order is away from filling. So if the market moves from fear to greed and the pending orders section say your limit order is 26% away from filling and the market's still going up, you can just cancel that particular limit order at no expense to yourself and then just set up another one, or just smash by some more sats at the market value. The choice is yours, really. You're not governed by any strict rules on this. So summary, how much attention should you pay to the Fear and Greed Index? Well, depending on how much time you spend on sites like Crypto Twitter, or X as it's known as now, sites like Cointelegraph or CoinMarketCap will certainly not hide what the market sentiment is. There are charts and graphics that will describe this on places like BitBo, CoinMarketCap, and CoinStats are typical places you can find this index. During a period of extreme fear sentiment, any amount of buying when the market is in this phase may feel a little bit unnerving, but this level of conviction and long-term belief is undoubtedly the most profitable and best way to build wealth. And like I said, combined with the DCA strategy, it will feel very rewarding if you do somehow time the bottom or even get relatively close to it. I'm sure I share the feeling that many other Bitcoiners must feel when the market took a huge drop in 2022 after the capitulation of several platforms like FTX, BlockFi, Celsius, and Three Arrows Capital. There was a prolonged period of extreme fear when we wished we'd have stacked harder and bought more Bitcoin. So my final thoughts. Michael Saylor, the CEO of Strategy, is a full-on Bitcoin bull who pays no attention to the Fear and Greed Index, with so much conviction and has no shame in declaring that they will be buying the top forever. So Michael Saylor and Warren Buffett are both extremely successful and have very different theses, but they both play the long game. People often ask me what my preferred strategy is, and although I am well into the DCA method, I use a phrase I heard in the space a while back that my strategy is to end each month with more Bitcoin than I started. Thank you for listening. All I would ask is if you hit the like and subscribe button, it will help me immensely to grow the channel. And also, I am forming a membership site, which is a platform for like-minded Bitcoiners that might be starting their early part of their journey, or just wish to mix with like-minded people, I will be holding regular Zoom meetups, and we'll also be meeting up once a quarter in person for things like a meal or a curry. Membership on the platform will start at £5.50 per month for early adopters. Thank you.